crowdfunding, and we have an excellent panel brought together for you guys. Our moderator, Ed Dartley, is a counsel in the Funds, Services, and Financial Services Practice Group at Pepper Hamilton here in New York. He also serves on the Bloomberg Alternatives Marketing Council. So I'd like to bring up Ed Dartley, Candace Klein, Joy Schaffler, Brett Johnson, and Scott Pickett. Are you up here? I'm up here. It's up to you. Okay.
Good afternoon, everybody. My name is Ed Dartley with Pepper Hamilton in New York. We're a national law firm, 500 attorneys nationwide. We do a lot of work in this area. That's the subject of the conference, crowdfunding, also peer-to-peer. And this afternoon, the topic of our panel is the business of P2P and crowdfunding highlights. We've got a couple of people here on the panel who have got extensive experience in this area. I'm going to let each one of them introduce themselves so that I give them the proper introductions. Candace, I'd like to start with you. Candace Klein of Dealstruck.
Hello, thank you, Ed. My name is Candace Klein, and I am an attorney. I'm a counsel with Elnock Grossman & Scholl, based here in New York. I am the Chief Strategy Officer for a peer-to-peer lending platform based out of California called Dealstruck. I've been very active in the crowdfunding space since before day one, along with Joy and others that are in the room. We've been working on drafting legislation before it was passed into law, and then working directly with the SEC and FINRA in drafting the regulations thereafter. And I also sit on the Bloomberg Alternative Council.
Yeah. So then next is Brett Johnson.
Yeah, thanks for having me today. My name is Brett Johnson. I'm the founder and CEO of One Minute Place and also One Minute Forum. And for about 3 years now, 7 years, we've been running an investment conference that tries to bring together the most promising new companies and technologies in health and medicine. Over the last few years, we've been focusing on crowdfunding and some of the new alternatives to raising money using the internet. So my goal today is to try to get a little bit of a perspective on what's happening in the healthcare space, and specifically some of the players that are in that area. Our panels have really focused on trying to showcase the leading platforms in healthcare finance, and so hopefully I can give you some insight on that.
Terrific. Next is Scott Pickett.
How's it to all of you? My name is Scott. I'm passionate about real estate. I did my first real estate investment at the age of 13, my first international real estate investment at the age of 22. And what we want to do is share with you today the impact of what's happening from a real estate perspective with the world going global, and the impact that crowdfunding is having on that. I think the most important thing is that real estate is still an industry. The fundamentals and the perspectives of real estate are still the same. Crowdfunding is merely a different vehicle upon which to do it. It doesn't mean that the fundamentals of real estate change very dramatically. But our purpose, if you know or don't know, is that 49% of the world's wealth is held in property or in real estate. And yet only 12.9% of the global community has access to real estate. And by 2020, we want to double that to 25%. That's why we're here, and that's why we're passionate.
Okay, and finally, Joy Schaffler, Principal of Financial Services Public Relations from Leverage PR.
Thank you. I'm Joy Schaffler. I run Leverage PR, financial services public relations firm. I also sit on the board of CIFRA, which is the advocacy group, and I'm a former private equity firm director.
So thank you everybody for being here today. Joy, I'm going to start with you because I think out of all the panelists, you are the most of a generalist. And the question I have for you to start us off is, how are you seeing crowdfunding, the market changing over the last year or so?
Absolutely. So what's really happening in the market, and I think Candace can probably speak to this in broad terms as well, is people are either specializing, so they're going and are owning a sector of the market. So whether that be real estate or whether that be sports and entertainment or health and beauty, just healthcare, they're owning one segment and they're going very deep. And they're acting almost like a traditional investment bank in some regards, where they'll go in and they'll find the investors, they'll put the deal together and really find high quality deal flow and then good investors and almost act like an investment bank for that particular sector. We're also seeing just straight niche like donation rewards platforms pop up that are doing the same thing in donation rewards, that are planning on making equity pivots later when the when general crowdfunding becomes legalized. Or we're seeing kind of traditional companies get into the space.
Candace, I'd like to get your view, but Joy, just quickly, are you seeing, is in terms of the players that are out there today, are the generalists predominant or are specialists predominant, or is it 50-50?
I think that there's a lot of generalists who kind of started out in the industry, and if you look at kind of the actual curve of their success, typically it took them about 2 years to gain traction, whether that be Indiegogo or Kickstarter, or even some of the, right now people are doing Reg D transactions from an investment perspective, but it takes time to kind of get to that critical mass. So the people who are doing the specialized transactions are having more success right now because a lot of times they came from that ecosystem and have both of the, they already have deal flow and they already have investors. They're just utilizing an electronic platform to put them together.
Candace, what are you saying, Margaret?
Well, I think the Jobs Act was a wonderful thing because it got us talking. It got the discussion started on crowdfunding for securities. I think that as a result, there are a number of platforms that have popped up, and there are a number of them that have fallen down, including one that I have owned. And so I can tell you that I think that a lot of platforms tried to operate under the Jobs Act as it is written today and as the regulations as they're proposed today, and many of those platforms did not succeed. Many of those platforms found ways around the Jobs Act, and I think that as a result, we're going to see a new proposal. There's got to be a Jobs Act 2.0, and I think that the people in this room are the people who are going to largely be responsible for creating a securities-based crowdfunding industry in the United States that makes sense not only for the issuers, also for the investors and for the community at large, and we're not there quite yet.
Terrific. I want to switch, we talked about generalists versus specialists, so I want to switch to Brett and Scott. And starting with you, Scott, given what you just heard, you're a specialist because you're a specialist in healthcare. And do you think
No,
that...
real estate. He's real estate.
I'm sorry. No,
I
meant Brett. My apologies. Brett, you're the specialist in healthcare.
Right.
And...
Or sort of. I'm not sure. It might be a bit stretch, but I'll try.
Just own it, man.
I'll
Just own it.
Okay, I'll actually give you the opportunity to describe yourself as either a generalist or a specialist. And then give us your view as where you think the market is going, number one. And number two, where is the market in healthcare for this type of financing going in your view, and where is it today?
Well, that's a good question. It has not developed nearly as quickly as people had thought it would. I mean, two and a half years ago, we did our first session, and people were very excited about how this is going to change the nature of the game. And I think healthcare is really a unique situation because it's, I would say, infinitely more complicated than most investment fields, and that's specifically because of the relation of the regulations in healthcare. You've got two big issues: the FDA and reimbursement. So you have a great idea, but then there's these two big layers, and that is you got to get this device or this drug approved, and that can be, who knows whether that can work or not, and then you have to get reimbursed. And so it ends up being infinitely more complicated and a longer term kind of a investment versus consumer products, which people can make an investment through. It's like a circle up. And these are products you can touch, you can feel, you can even sample. You don't have issues, like I mentioned, of the regulatory issues and so on and so forth. So I think it's broad brush. I think it offers, and there's still great hope. There's 5 basically major portals out there that I can talk a little bit about as to what they're doing But I would say there's still great hope, but it has not developed at nearly the rate that we would have thought. In fact, I think it's hard to even sort of focus on 2 or 3 deals that have gotten done successfully in healthcare on, where the crowdfunding or the internet has played an important platform. Deals are getting done, and people are using the internet and sort of crowdfunding concepts, but it's really venture capital, traditional venture capital, where people are basically betting alongside of an existing investor. And all you've really done is use the internet to communicate to a broader range of prospective co-investors. So I think in the healthcare business, syndication is the model that is working well. And the idea that you get a lead investor, you use the internet, communicate to a broader range of other investors, and people are betting on that deal or betting on that jockey, if you will. So I think, and that's sort of really is not much different than traditional investing, is you're betting along with people that know. I think one of the other big trends I would say in healthcare is the notion of venture philanthropy, and that people invest in healthcare for more than just an investment. For many people, it's because they've been personally affected by a disease or some ailment. And the internet creates an opportunity to identify a company that perhaps, or a technology that could perhaps change their future or change their, have had an impact on a parent or a loved one and some sort of ailment. So there's a whole additional driver. So I think in the healthcare sector, I would say that there's sort of those are offsetting factors. On one hand, people can become passionate about this because it really matters to them, and they'll overlook, and almost in terms of venture philanthropy in a sense, and that's offset, of course, by the complexity of healthcare. So I'm sure that's maybe with too much information or not enough. I don't know.
Not at all. So what do you see as looking ahead? What do you see as a driver for your industry for growth in terms of expanding capacity for deals?
Well, there's in terms of the number of deals out there, there's lots of deals. One of the funds that we follow is Angel MD, and they're expecting, they have about 500 or 600 companies now on their platform, and they're projecting like 5,000 companies to be on their platform, and they're trying to go out and get 20,000 investors, and they're hoping on 5,000 investors on their platform in some sort of time. So there's a tremendous amount of deals and deal flow out there that want to use this. The challenge is getting the investors involved. So I think there's going to be a lot of opportunities to see a lot of tremendous deals. The challenge always has been in this investment space is getting the investors. Now there's 9 million accredited investors, I'm told. Maybe I'm not sure whether that's consistent with what you guys are hearing, but yeah, that's what I'm told. And only a small percentage of them have actually begun to use this. So the industry guys cite the fact that, well, just 3 or 4% of these people started to make some investments. It's going to be a tremendous amount of money going into the space. So I think it's going to just take some more time. And I think the big bottleneck in the healthcare space is really in the due diligence area, because I was saying earlier, it's a complicated investment space, and it's not like a consumer product or a real estate product, which you can really kind of get your hands around. You get into devices and technologies and science and biochemistry, that gets very, very, very complicated. So the challenge and the bottleneck is, can you do the due diligence that is going to be effective enough to make the investor comfortable enough? At the end of the day, that's what drives investment.
So you mentioned real estate, which is a nice segue to Scott. So Scott, are you seeing the same kind of bottlenecks in the industry, or is Brett right that there's more traction there with respect to real estate?
I'd like to just reverse engineer your question just a little bit. You spoke about generalists versus being specific. And the question I'd have for everyone in this room, does Tiger Woods play tennis and does Andre Agassi play golf? There's very, very few examples ever of where a generalist is successful. You've got the law of the rule of 10,000 hours, et cetera, et cetera. So it doesn't matter what industry you're in, it doesn't matter what profession you're in, you need to focus and need to be good at what you're doing. Coming back to your question in terms of the bottlenecks, I think one of the biggest challenges that you've got in the real estate industry is that in the last 3 months it's really taken off. It's got a lot of exposure, there's a lot of people talking about it, there's a lot of good opportunities. The bottleneck won't necessarily be at the moment, the bottleneck will be in a couple of years' time. Because anyone that's been in real estate for a while knows that real estate has a long tail. And what that means is that you only find out about your mistakes a couple of years later. If I buy a can of Coke from McDonald's, or whatever, burger, and it doesn't work, they can fix the process tomorrow morning. When I do real estate, I'm only going to find out about my mistakes 2 years from now. if we get another global financial crisis or market shock or economic shock or political shock, which I can guarantee is going to happen in the future, I can't say when, that's when we're going to see some real kind of shaping up and moving around in this industry. And so from a bottleneck perspective, I think the challenge that we've got is not necessarily based on regulations. I don't think it's based on people's awareness, because I think real estate's a lot easier to understand than necessarily investing in the healthcare industry. But what I do think is a major bottleneck is people understanding the difference between experience and the technology platform.
So give me a little bit more color on the last 3 months. What's been working and what's been taking off?
So the last 3 months, pretty much, interesting enough, I'm not sure how many of you guys know Carl from crowdsourcing.org, but in early March I sat down with Carl and I said, look, this is what we've been doing this for many, many years, and we want to focus specifically on the niche of real estate, from a crowdfunding perspective. And he said, oh, we need to look into it and everything else. And as we know, Realty Mogul raised $9 million, Fundrise raised $31 million. There's been a substantial investment in this space. And I think one of the most important things is, based on the back of that, people are starting to get more and more confidence about investing in real estate platforms and the traction of how you can do it, how you can get your assets, and most importantly, how you can get your return.
And in terms of what you see coming down the line, you mentioned bottlenecks. You think that's something that's 6 months away, 12 months away, or is it longer term?
Look, from my experience, I've generally found out about my mistakes in real estate 2 years later. I don't know about everyone else in the room that's been investing in real estate a long time, but it generally takes about 2 years to uncover whether you made a mistake or not in real estate. And that's if the market's going well. One of our partners, Peter Fenstra, says, and it's a pretty direct comment, but he says even turkeys can fly in a hurricane. And the bottom line is the real estate market at the moment in America is pretty easy. You actually don't need to have a hell of a lot of brains to be making money in this current market. It's a rising market. The question will come, what happens when the market changes? What happens when the economics change? And coming back to the bottlenecks question, that is why globalization is so important. Because what you can do is you can drop the challenges you've got of regional problems